Good evening, revolutionaries, and welcome back to Rise Up After Dark. The best thing happening after dark. Will, it's good to see you, as always. And tonight we are excited to announce that we're joined by Simon, who works over at Gauntlet. You may have remembered them from the first time that we hosted them. Oh, geez, when was that? I'll have to look up and see which episode number that was. It's been a minute.
Couple months, I reckon.
Been a few months. So I was trying to come up earlier today with like the best way to do a bumper sticker introduction to Gauntlet specifically. Who are you and what do you do? And so I'm curious to hear what you think about this one. And then I'm going to turn it over right to you, Simon, so you can correct me if I misstate this or add a little bit more color. But you guys are effectively the risk managers, the curators of DeFi and Vault experiences for people and protocols interested in hosting their own options. You kind of help manage and mitigate risks by giving people a little bit more information about assets to stake, or not to stake, assets to offer, different ways to set thing up. Would you say that's an appropriate way to kind of describe?
That's an appropriate way. Yeah, it's always very tricky for Gauntlet because we do a whole lot of different things, but I think that's a good summary.
So what is it that you specifically do over at Gauntlet?
So I work with the product and the marketing team. So I'm at the intersection of the two, and I work on the product marketing strategy for yield products. So specifically, any kind of like yield curation, yield strategies that we curate is falling under my purview.
Mm-hmm. I am curious because I've wanted to ask this about Gauntlet for a while, because it's kind of like around the creation of Gauntlet and trying to help be essentially like a consultant for a lot of these DeFi platforms, and just kind of like trying to move DeFi in the correct space. It's kind of like overall how I view Gauntlet. Just quickly, like that's a good summary. Like overall, trying to move DeFi in general in the correct general positive direction, being a sustainable business, not as risky, not as many potholes to kind of screw people over in the same kind of way, right? General sense, general gist.
Yeah, 100%. I think the company, there's something that Tarun, which is the CEO and founder, he started with this vision of bringing TradFi Rigor to DeFi, kind of like more risk models and a little bit more strictness to how DeFi is approached, and moving it. You're right. I think going into the right direction, a little bit less the Wild West and a little bit more of a risk-first approach to DeFi, yield, lending markets, etc.
Yep. And I've always wanted to ask this because I don't think I was on when we were chatting with Gauntlet first. And it's when things break on DeFi protocols and solutions. Is it typically a risk management on the yield side that breaks first? Is it governance that breaks first? Is it a hole in the code that breaks first? Is there something that's like typically when something goes wrong on usually like some kind of new smaller DeFi platform, and every now and again you have something go wrong with a bigger one. Every now and again, although it's rare. Like, is there one thing that's like usually the problem that people just don't pay enough attention to, or it's like such a complex problem there's a lot of potential gaps? I've always been curious about that.
That's a great question. So I can go into an answer that's a little bit more complex, but I think at the end of the day, it's understanding where the yield is coming from is the most important things. And I think that most things go wrong because users don't understand for a reason or another. Maybe it's like just on purpose where the yield is coming from. And so from there, basically comes a whole bunch of like risk surface. So like, for instance, someone could break the risk the yield mechanism could break. So like the way that the yield is generated could break. So like we saw recently, like the stream finance, this yield bearing asset, had a lot of repercussions in DeFi. You've probably covered it on your show already. But this is something where like the yield mechanism, so the underlying yield that was generated, it was not transparent at all. And so there was like a loss, and it led to like a whole cascade of events that led to bad debt and user loss and things like that. We can talk about different kinds of risk, like smart contract risk, platform risk, yield risk, et cetera, et cetera. But yeah, at the end of the day, the more users understand where the yield is coming from, I think it's really the most important point to understand when going into these yield strategies. And I would say like this is where like most of the movement is coming from, and the events that we don't necessarily want to see.
Gotcha. I'm curious what like maybe the worst example is that you've seen or can think of like where the yield's coming, where you saw that and you were just like, wait, what's happening here?
Well, I think stream finance is an interesting one, an XUSD. So as a reminder, you could, put your USD into a stream finance as a protocol. You get XUSD as, in exchange for this USDC. And basically they would run, so the website was not clear at all. There was a transparency page that was pretty much saying coming soon. And so it was a bunch of like obscure delta neutral trading strategies.
Wait,
so it was said.
I'm sorry, so I'm just time out there.
Yes.
There was a transparency page that was like, we're working on this part.
That's correct.
Don't worry about it for now. Later.
Hey, it still counts. The page was technically there.
The page was technically there. Check mark in that box.
The page existed. And so yeah, and then obviously the protocol announced like a 93 million loss. And it had, I think at peak, it had around like 500 to 600 million in TVL. So you take a 93 million loss on that, which means you're pretty much gonna have to halt redemption, because if everyone redeems at once, then you cannot pay everyone.
Yeah, right.
And so redemptions halted, all the things that we saw ensue. Which is one of the probably the worst examples that I've seen in terms of like not knowing where the yield was coming from, probably on the riskier side in terms of yield generation, and probably actually a fallout from the 10th of October liquidity market stress event with the cascading liquidations is probably actually an aftermath of that. And the loss was probably taken from the 10th of October liquidation. I mean, we could speculate a lot about all of this, but this is kind of like a theory.
That begs a follow-up question related to what you just said, but different from my previous question, which is actually a question I've never thought about asking. With you, like in the industry, I'm curious, with the October 10th incident, event, day, Black Swan event, whatever you want to call it.
Shit show.
Shit show, clusterfuck, pick whatever term you want and apply as much color as you like, and you know what, you're still pretty accurate to what happened. And for those of you who are watching and are not recollecting what it was the day where there was a massive liquidation event. You go and look on any altcoin charts right now and go back to October 10th, and there's typically a gigantic candle that went all the way down and came all the way back up again for the most part. How did that change the crypto space? Were there certain things that were just like cleared out? Were there certain things that broke? Were there certain other ugly things that kind of came to light as a result that you're aware of? I'm just curious kind of how things may have changed.
Yeah, definitely. And as we get into like those topics that have a little bit more nuance, I just want to say like, the opinions I'm presenting here are my own, not representative of Gauntlet. I'm not offering financial, tax, legal advice, and it's not a solicitation to buy anything. But yeah, we've got a website at gauntlet.xyz. You can learn more about everything that we do. And so, yes, there's been large repercussions from this cascading liquidation event. First of all, we've seen really a flight to like more, I'm going to call them risk off, but like more conservative risk profile opportunities. So for instance, we create a number of yield opportunities in vaults, right? Each of them has like a specific risk profiles depending on the collateral that we allow people to borrow from the vault. So, we have, it kind of like borrows from like conventional naming. So there's like prime, which is the most conservative risk profile. We have balanced, which is self-explanatory. And then we have frontier, which is also self-explanatory and maybe has a little bit more of an aggressive risk profile, right? And so what we've seen is actually stable coin flows really concentrate around are prime and balanced vaults. And so there's been really this shift from like more, again, like risky profiles to more like conservative. So there's really been a lot of like different flows. And the other effect to that is that open interest was really high on platforms like Hyperliquid, on Binance, any kind of like perps where people were basically betting on futures. So like if you long, you bet that the price will continue to go up. And if you short, you bet that the price will go down. There was a high percentage of long positions. And so after 10/10, what we've seen is really a decrease in the number of in the total open interest, so the number of bets, directional bets on those futures. And also we've seen way more balanced between longs and shorts. And we can see that through funding. So funding is actually a tool that allows us to say like, oh, there's like a lot of people that are betting this is going to go up, or there's a lot of people that are betting this is going to go down. And so how it works is if you get a lot of people betting that it's going to go up, so longing like any kind of like asset, then the funding rate is basically paying for people to bet that will go downwards. And so this funding rate was really high for shorts before the 10th of October. And now if you go on Hyperliquid and you look at a bunch of perps and a bunch of assets, like it's way more like balanced than it used to be. So it's evolving between like maybe 10% APY. So again, we look at like what the yearly funding rate looks like. So these are like the two big trends that we've noticed after this particular event.
No, I mean, that makes total sense. After an event like this, it scares people get more conservative. And at the same time, people who were really bullish, they see that kind of thing happen, sentiment shifts, and what was once a super bull heavy market becomes more balanced with bulls and bears. Makes sense.
I mean, so I want to dwell on this whole leverage thing for just a second, because obviously that scared a lot of stuff out. I mean, today, someone brought it up in the comments already. Today, we had a weird little whiplash moment where hundreds of millions of dollars worth of shorts got wiped out. And then within minutes, hundreds of millions of dollars worth of longs got wiped out as it went, straight back down again, pretty much, universally across the top of all, at least the big stuff. And I mean that the stream thing was wild. I remember that. I mean, it was very recently here, but there was so much going down with that. It's kind of crazy to see something like that get as far as they did, considering that we've already, I would have liked to think, learned some lessons like from the Terra Luna crash or from Celsius or from FTX. I mean, take your pick, because Stream wasn't hacked. Just to be clear, they weren't hacked. They're just morons doing shady shit. There was a whole lot of they had a certain number. I mean, you mentioned how much TVL was reported as being on the platform, right? But they did not have the deposits to back that up. And they're like looping that crap all over the place, borrowing from here, borrowing from there. And the second all that got compromised, they froze everything, which touched like 5 or 6 different DeFi protocols all over the place that were just kind of, through happenstance or through bad business practices, no auditing, no good risk management, whatever, they were exposed to this kind of dumpster fire. And then it rippled across through everything. And then because didn't the guy who bought it and took it over after, he disappeared. He deleted his Twitter and vanished off the face of the earth, and no one's heard from him ever since this whole thing cascaded. Because Stream, I think for some context, shut down last year, and then someone bought it and restarted it again, and they hired this dude who initially traded the $93 million that resulted in the loss, and then they just started infighting as a whole. It's so messy, but it's just crazy because here we still are in the wake of all these other exploits, or not even exploits, in the wake of all this other mismanagement, still playing the same game. It's just wild to me that they got away with it for that long.
Yeah, that's right. And 10/10, I think, or 10th of October, whatever we want to call it, had really like deep repercussions. Personally, like I'm hoping we're out of the weeds and we don't see any more of those like bodies floating out the river or whatever you want to call it. But it could definitely happen. I mean, it was a significant event in terms of like just the sheer amount of liquidations. I believe it was the highest volume of liquidations processed in such a short amount of time in dollar value. So that was quite interesting. Another thing that we've noticed that's quite interesting is also the compression of like yield rates across DeFi. So you could go to any protocols right now, and the yields are definitely lower than they were like a month ago, 2 months ago, 3 months ago, right? And so that's also coming from like a little bit less borrowing demand from the USDC perspective. I mean, when we think about like who borrows USDC from like various yield opportunities in DeFi, and that's where the yield is coming from in a lot of like those protocols like Morpho or Aave, is because people want to borrow. And people want to borrow basically to either keep their exposure to like an asset that Bitcoin and then just like borrow USDC against it to either enter new DeFi opportunities or even purchase more Bitcoin and just increase their exposure to Bitcoin. And so because there's a lot less interest like this, we've also seen yields compress a little bit. Which is interesting, and it's definitely not like a state. It's a temporary state. But it's another trend that we've noticed. And so as a result of that, there's an interesting opportunities in terms of like diversifying yield sources. And so we're actively working on some of our own strategies and products to actually diversify like yield sources and not rely on like single chains or single protocols. And also, take advantage of like the different yield opportunities that we curate. So there's definitely some interesting dynamics at play with like liquidity, borrowing demand, supply, et cetera, et cetera. We've actually published a liquidity stress report.
I just read
on
that.
what happened. Yeah, so it's super interesting. If you're into DeFi and if you're interested in like how capital flows, like we've pulled a bunch of data and a bunch of metrics, and there's some cool charts in there. There's some cool trends that followed from those events. So yeah, if you're curious, you can download it on gauntlet.xyz. I think it's you have to go into the blog, and there's a blog article. Yes, so I believe that is, if you go under insights, top nav,
gotcha.
and you go blog, there should be a drop down. Yeah, there we go. Liquidity stress event report. Mm-hmm. That's the one. So yeah, there's a bunch of information in this article already. So if you're curious, you can just read through. And then if you want a little bit more detail, some granularity and more data points, you can click on this massive call to action, I realize now, to actually download the more fleshed out report.
It's big. Yeah, no, it's good. I was actually going to shout out before we even got here, just to go take us back to the homepage. You guys have a tremendous amount of information here. There's a whole bunch of really interesting stuff, kind of like, throwing into some comparisons across some bigger DeFi protocols and stuff like that. Which I'm a big fan of anyone who displays, I don't want to say more information that you need, but like, give me all the good stuff. And I'm a big fan of this. I don't have that sound on my board. Evan has a sound on his board of me saying I'm a big fan of this, but it would be playing right now.
I do also just want to take a second to point out a comment that made me laugh from DeWoofy on TikTok, and it was when you were talking about how like yields are compressing and markets are stressed. DeWoofy goes, "My gains are compressing. My gains are stressed."
They sure are.
Yeah, they sure are, man. They sure are. Hell of a Q4.
So just given that this is kind of what you guys do on a larger scale, I'm curious if you have any words of wisdom. We've been doing a lot of coverage lately and a lot of talk about people maybe looking at getting involved a little bit more in depth into the world of DeFi kind of for the first time. Perhaps someone has taken it as far as, I recognize this isn't DeFi, but baby steps, earning interest on their USDC, holding it on a Coinbase account, and would like to level that up a little bit. Maybe take their own custody, try out some of these yield farms all the kids are talking about these days, all that sort of stuff. Given that you guys analyze and help protocols mitigate risk on the user side, because obviously you guys offer a few user more retail focused product offerings as well. Given that would that all fall under your department? Do you do the whole thing, or are you on like more one side or the other?
No, I work on all those sides.
So I mean, what do you do if you were trying to prepare someone to get started with something for the first time, maybe with regards to being able to analyze a little bit of this risk? We've talked about the first thing you need to answer for yourself. Where does the yield come from? If you can't figure it out, it's coming from you. That's a problem. Just go somewhere else. Anything else that you would add to that? Any words of wisdom that you have for people looking to like maybe, run a little bit more of a self audit on something that they maybe haven't looked at before?
It's a great question. Actually, we've released version 2 of our app, which has a lot of details about different vault opportunities that we do curate. So we say it's only ours, but we curate across many different chains, many different protocols, and we try to basically provide as much information as possible. There's another actually resource that I would like to point people to, which is fantastic. Everyone that's like, I use it all the time. Everyone that I sent it to thinks it's fantastic. It's called the Vault Book. So it's accessible again from the Insights tab of our website. And basically it gives insights on curation methodology for all the vaults that we curate, which is 75 plus at this stage across many different protocols, many different chains. We just started curating on Kamino, on Solana. So if you're a Solana person, there's yield opportunities there. Obviously Morpho vaults on EVM chains are also pretty popular. And so the Vault Book is extensive methodology on curation. So if you're interested in terms of where the yield is coming from for all those vaults, this is where we go through that in the Vault Book. And so if someone was looking to take their first step into DeFi, I would encourage them to learn as much as possible, again, for each of these protocols, or the chain of their choosing, where the yield is coming from. Is it lending yield, which means you're depositing assets into a vault that then gets lended out to people who borrow it, and so they're willing to pay some kind of yield, and so the vault captures that yield and you get that yield. So it would be something like or Morpho vaults or Kamino vaults, those are lending vaults, right? Or if you're feeling a little bit more on the technical or a little bit more complex, for instance, our drift vaults. So we have drift perpetual vaults. The way that they work is basically it's delta neutral strategies using Jupiter HDLP. So HDLP is basically the token on Jupiter that provides liquidity to Jupiter ecosystem, right? And so at any point in time, it is composed of a basket of different assets. So it has exposure to a little bit of Bitcoin, a little bit of Solana, a little bit of ETH at each and every point in time, right? And what we do is on Drift, we open short positions for each of these types of exposures, right? And so we capture the yield in between. So, we offer any kind of, so we don't have any kind of directional exposure. So if Bitcoin or Sol, ETH, climbs in price or declines in price, then we neutralize that exposure through different positions, and then we capture the underlying spread. This is a little bit more complex. It's a little bit more, it depends on the open interest, because we capture the funding rate as I explained before, which is when a lot of people long and you're short, then you get paid funding rate on top. So obviously those when there's a lot of open interest, those strategies are interesting. And so anyway, we have this kind of menu of different yield opportunities. And we even have this new yield strategy that we're creating on our own incubated vault infrastructure, which is called Era. So that we've built out internally. And this strategy is called Gauntlet USD Alpha. And so it was originally just taking USDC on base. And so it would take, a user would supply USDC on base to the vault, and it would distribute to different lending opportunities on mainnet, on base. And then we've added Optimism, we've added Arbitrum, we have added support for Pendle PTs, which are fixed yield tokens. And we've just expanded to opening supply and withdraw from Ethereum mainnet, so Base again, Arbitrum, and Optimism. And we're planning on adding more yield opportunity. And so the way that this works is like, you basically, a user can supply into this vault, and this vault will allocate based on our risk modeling and our like Gauntlet's optimization engine to like a list of basically whitelisted kind of like strategies, such that I've mentioned before. And it reallocates over time depending on, you know, automation and manual oversight as well, in terms of like where the best risk adjusted yield is. So at the moment, it's interesting because it's like, it's very much into our prime vaults, which are our most conservative risk profiles on Morpho. But, you know, over time, it also like evolves and may allocate to like other vaults and things like that. It's accessible directly from our app as well. So there's something for everyone. You know, if you're a Solana maxi, there are Kamino vaults. If you're, you know, the Ethereum ecosystem is more your thing, then we have a whole bunch of Morpho vaults. And if you're, you know, just want to have something more set and forget that automatically allocates for you and finds the best risk adjusted yield for you, then we have Gauntlet USD Alpha. Sorry, I've been rambling for a while, but I hope that's okay.
I was actually going to ask you to talk about the thing you just finished talking about, which was, I wanted to dig into the idea of vaults a little bit, because we've kind of been seeing more and more of these types of products pop up. So for anyone curious, which Simon, you already did a great job explaining, but a vault is literally the difference between a vault and a non-vault strategy would just be, in a non-vault strategy, you might pick a protocol, something you feel comfortable with, you park some stable coins there, you park some ETH there, some SOL there, some whatever you're farming with there, and you farm that yield, and you have to go manually adjust it or change it or remove it and put it somewhere else if you no longer want to be there, or maybe there's a better opportunity over here, something like that, whatever. In the vault side, you're basically delegating your amount that you would like to farm with to the vault, and the vault is picking where is the best place to put it based on all sorts of internal criteria, like Simon's talking about, you know, with risk or optimizing for the best yields or, you know, whatever.
That's correct. And those vaults are composable as well in some opportunities. So for instance, we have those landing vaults on Morpho, right? Where like a user may supply assets into the Gauntlet curated vaults. And these assets get lent out to like users that want to borrow these types of assets, right? And then like our infrastructure, for instance, our alpha strategy kind of like sits on top of that. And like, it's kind of like, it's a vault of vaults in a lot of ways, and then distributes to those kinds of vaults. So it fits different use cases. Like if someone's looking to, you know, optimize their risk profile themselves, or like they're only comfortable supplying assets to a vault that will lend to a specific type of like collateral. So like super blue chip, for instance, like only WBTC, WETH, great. Prime Vault is great. But if you're looking for like something that's dynamically, you know, allocating, then like there's the level on top that provides like a little bit more utility. And so these are, I'm going to try to pronounce it, but with my accent French background, I don't know if I'll be able to do it. Synergistic in a lot of ways. So I've tried. I don't know if you have achieved it, but nailed it. Thank you.
We all know what you're talking about.
Yeah, great. Lots of synergies.
Yeah, we've recently been seeing, I think, just a lot more of the vault strategy kind of thing pop up. I honestly prefer it. I think that it's one of those things that just like, oh my god, it drastically improves the user experience of a DeFi protocol. Nothing at all says you can't run it manually. It's a little bit more, you know, management on your side. I don't know. I like it. That's everything that I'm doing right now. I think DeFi Carrot would be the one exception in a place where I'm just like in its own little thing. I know it's by itself. It's doing its own thing. But to be honest, that's not even a fair comparison, because they're doing a whole lot of behind the scenes, you know, yield management and picking, you know, where the best place is to compile all of their different yields that then go into their token. So I guess, honestly, I've now talked myself into realizing that's also a vault style strategy of sorts.
Definitely. And personally, like I do a little bit of both, right? So I have, I'm just allocating, I'm supplying USDC into some Morpho vaults like manually.
Yep.
And then I'll also have some that like I don't really need to like, move
right.
around or check as much.
On that note, with you, what you're doing personally when you're picking a vault, because sometimes I know this can get a little confusing, especially when there's a ton of options. If I click into Morpho, for example, and I just look up like options for USDC, including this and that chain, whatever, I am greeted immediately with like 30 options, and the rates are variable. The rates of yield are variable. Do you, when you're picking one, obviously knowing what you know, you have a little bit more of a background and some context to make these decisions, but how are you choosing? Do you choose just based on the number? Are you just kind of chasing the highest one? Are you, running more of a personal audit on the different service providers, whoever's curating the particular vault that you're looking at? I know, a lot of them are run by the same Steakhouse has a ton of them. Beefy's got a number of them, but how do you pick?
That's a good question. I mean, my personal method, obviously I'm super biased towards Gauntlet, so
Sure.
I would only allocate.
We'll give you that one for free.
Gauntlet curated vaults, right?
I will say this, and this is not me blowing smoke up your ass or anything like that, but whenever I see anything curated by Gauntlet, I have chosen it. Yeah. I just like, nope, trust this more. I don't even care. I do not care if the interest is lower. I just go, this seems safer, cool, earning interest. Awesome. Great. Love it.
I asked Simon because personally, I will pick the one whose reputation I know more about than just the one with the higher number.
Yeah, that's an interesting insight in terms of like, there are different ways you can filter out and basically create your own decision-making process, right? Do you not care about risk and only care about max yield, right? Do you care about like who is actually creating the vault that you're getting in, or do you just not really care? And maybe you care more about the assets that it's landed against, right? And so Morpho, taking Morpho as an example, has all this data available, right? So you can like click into a vault, see who's curating it. You see the APY over time. What's also interesting is like the amount of liquidity. I mean, it depends. If you're going to deposit like a large amount, then you need to make sure that like, if you want to like be able to withdraw at any time, and maybe you need to withdraw it like under a short period of time, you need to check that there's enough liquidity. Like all these data is already there, and then you can check like which assets it's landed against. So you can have a look at like the allocation, and you see, all right, like out of like 100% of assets supply into this vault, like X amount is landed against WBTC, X amount is landed into wrapped ETH, for instance, against wrapped ETH, right? And so you can also be like, oh, well, I'm not really familiar with this asset, or like, I really like this asset that it's landing against, so like I'm gonna pick another vault, right? And so you have all this data available to like make a call. And I'm also I want to give a little shout out to some friends of ours over at Redstone Oracles. And so they also run a company called Credora Ratings, and they're going to like also I believe add some extra information to specific Morpho vaults. So there's a bunch of teams that are working to like bring more transparency. Obviously, we're doing this with Vault Book as well. And there's some interesting data points. But at the end of the day, you have to think about like, okay, what's important for you, and then make your decision based on that. And again, you have to know where the yield is coming from. Like, again, this is like the most important thing. So on Morpho, it's coming from the assets that the supply from the vault is landed against. So you can see the market allocations. You can have a look. I think it's even visible from like the actual like the interface straight away. And it's the same for, by the way, from Kamino and Solana is the same. You can definitely check like which assets the supply is landed against. And that's going to be your the most important factor in the vault creation is definitely the selection of collateral assets. And you will actually see, if you look at like Gauntlet vaults, Prime versus Balance versus Frontier, you will see the difference in collateral assets that are listed against these vaults. And you'll be able to see like, okay, like a Prime is only WBTCW wrapped ETH, right? And then as we go like Balanced and Frontier, there are more assets. There are more like, I don't know if we want to call it like exotic assets. You will see like Pendle PT tokens again. So this is another one. And the last one that I want to mention is we also curate things like vaults that are called ecosystem vaults. So for instance, we work with Cap Money. So if you're familiar, it's a yield-bearing assets, new stablecoin. And they have this interesting way of generating yield through like restaking in the system of operators. I encourage you to like browse through the docs. It was fascinating to me to understand like how the yield mechanism actually worked. And so we have an ecosystem vault that's only Cap assets. So they have 2 to 3 assets, including Pendle PTs. And so we have these ecosystem vaults where like, if you only want your USDC to be lended against Cap Money assets, you can go into an ecosystem vault, right? There's a couple of them as well that are available on Morpho. And so these are also interesting options if, you're if you're fans of Cap Money, for instance, like I am, you can, it's an interesting option as well in terms of like, but again, it all boils down to like collateral selection for the vault.
Mm-hmm. Simon, changing topics a little bit here. I'm asking this question selfishly. And I know it'll be of interest to most everybody here because almost everybody has used in our audience or has heard of these names or maybe even invested in just their tokens and hasn't even taken a look at the DeFi solutions on the lending side. But the 3 biggest names that come in mind to me immediately when I think of lending, I think Aave, I think Morpho, and I think Maple Finance right now. And of course, Kamino comes in mind as well. But those are the big 3 when I look at TVL. Can you talk about what makes each of those different? Because when people ask, go, okay, yeah, these are lending solutions. But then the next obvious question is like, well, like, why would I maybe use one over the other? Is it like, is one better for a specific person? Is one better in specific use cases? Are there different methodologies? Can you talk a little bit about that?
Sure, I can. I'm not sure how, I'm not extremely versed in like the technicalities between like all those protocols, but I can talk to the high level.
High level stuff is perfect.
Okay, that sounds good. So basically, Aave is a lending protocol on a lot of different EVM chains. And so the way that it works is like on one side there are supply assets, and on the other side there are borrow assets. And so it's basically, if you have to think about it and compare it to like a Morpho like vault, it's kind of like one vault. So like you can deposit a list of assets across chains and you can borrow a list of assets across chain. You've got like collateral on one end and like borrow on the other side. And like it's one basket on one end and one basket on the other end, right? Morpho is like permissionless lending infrastructure. So first of all, it relies on curators such as ourselves to actually create the vaults and the strategies. And so what we basically do, it's isolating those different markets. So again, we say you can only supply X assets and you can borrow Y against them. So as opposed to like everything being in like one kind of like basket and one other side, like one side lending, one side borrow, like we can get like a little bit more granular in terms of like, well, we can create free vaults and like vault number 1 is going to have this asset for lending and, only can borrowed into these assets. So it's isolated. Maple's a little bit different because Maple relies, and like I'm not extremely familiar with Maple, so take this with a grain of salt. But coming back to this question, like the big topic, I think that I've harped about enough is like, where's the yield coming from? And so when you supply USDC or USDC, I think for that matter, into Maple, you get syrup USDC or syrup USDT in return, right? Syrup USDC and syrup USDT, they are yield-bearing stablecoins, which means like they're just by holding them, they generate yield for a certain percentage, right? Where's the yield coming from? Where basically what Maple is doing is they operate like they lend this USDC to like, for instance, to big institutional players, right? So institutional loans are actually that are negotiated off chain and then brought on chain are actually generating the yield for syrup USDC. So it's interesting. You can browse. I remember It was a while back. But browsing around like the documentation from Maple, you can actually see like kind of like the loans that they're issuing. And so you can really see where the yield is coming from. So they're kind of like, they have different ways to generate yield, those free. And so again, it's like, what are you more comfortable with? And what kind of like architecture are you more comfortable with, or resonates most with you to start with, is probably like how I would approach like all of those. But I'm personally am using these free. So, you know, I'm also personally of the conviction that, you know, you have to diversify your yield sources as much as possible, or as much as that enables you. And so I like to think that, like, you know, with the assets that I deploy and the assets that I supply, then I get like yield from various sources that are not necessarily correlated in between them. And so that both, I think, is a hedge in terms of risk, because God forbid when platform went down, you know, like dude still have another two.
Exactly.
And then also, so it like reduces kind of like my risk surface around my assets. And also, like, if a yield source dries up for some reason, then, you know, there's more across it, and I don't need to move it around or things like that. So yeah, this is kind of like a high level overview.
Gotcha, I appreciate it. So what I'd kind of written down for myself is, I always have like a notebook with me. But it's like,
I have one too.
It's Aave. It's just like, yeah, I have a bunch of notebooks around me actually, with all my chicken scratch just written down. But Aave, just like a very much more so like a simpler setup with a basket, standard basket for collateral on one side, a standard basket for borrowing on one side. Morpho, it's like having a bunch of baskets all over the place that are more curated and provide more options. Maybe someone who's newer might get a little bit more lost. Maybe someone who wants a little bit more nuanced and to personalize their DeFi experience a little bit more, that could totally be a better home for you. That's the biggest reason why I liked Morpho over the past 2 years, honestly. And then Maple, it's really all about where that yield comes from, which is from institutional loans agreed off-chain and then brought on-chain. Okay, I appreciate it. Thank you so much.
No worries.
Yeah, I think this really touches on it. I'm really excited that we're having this conversation, because we don't get a chance to get super deep into like dissecting the specific risks of DeFi in general. So this is great. There was a comment in the TikTok from Black XXOR who was asking about borrowing against like vault positions, and so I was doing a little bit of poking around while you were discussing, and then you again answered kind of part of that question too, which actually ties back into where Stream went wrong, because in that, where they had, you know, a position with their own stablecoin, they would take that, supply it on another one, borrow against it in USDC, take that USDC back to their platform, remint their own token again against that new USDC, take it, go do it again, back and forth, until eventually the house of cards fell down. But in a more controlled environment with these protocols that are not doing it behind the scenes, reminting and minting and over-minting their own token. Like you mentioned, Kamino has an option wherein you can, you know, supply, get K-Sol in return, go do more stuff with it. Jito has options where you can stake, liquid stake, get Jito Sol in return, go do stuff with it, provide liquidity, do whatever, compound that yield, either just a simple restake or taking it somewhere with a Jito Sol pair, a K-Sol pair, provide liquidity, earn fees, you know, in that little area. Kamino's great because they have this feature which is kind of cool, where you can supply only one asset and it splits it for you into two, and then it does the management for you of the two-pronged liquidity providing position, which is awesome because it takes out this one really annoying step in liquidity providing, wherein you have to manage that position because it's, you know, it's supplied at a specific rate. Evan has a fantastic video breaking this whole thing down. I won't go into the whole thing, but, you know, you supply at one area. If price moves outside that area, you have to go adjust. Otherwise, you can, you can fall into some impermanent loss. You can not earn anything on it if it's trading outside of your supplied range. Whole big thing. So I just think if you're listening to this right now and you're thinking, holy shit, what? First of all, you're in the right place. You're in the right place. I know we're going kind of fast right now, but one thing that I would do is take 5 of the terms that you heard and just write them down and then go dig into them. Take your favorite LLM and toss it in there and say, hey, can you give me an overview of this term? I heard this term with regards to DeFi. Like, what are they talking
LLM is
about?
like your ChatGPT and ChatGPT comparables.
Yeah.
Definitely, and I think it's a good. I think there's a good theme to explore here, which is leverage and looping. Because like I think it's called multiply on Kamino, if I'm not mistaken. I haven't checked that in a while. So I used to have a bunch of positions. I actually used to do this manually, personally, on like things like Silo Finance, where it would like loop some tokens, and it would be annoying. So basically, the way that it works is you lend an asset at like you get X amount of yield. Right, and then you borrow an asset, try to do it for like a collateral asset at kind of like a lower APY than you're lending, and then you buy more of like the lending collateral and you just loop it, and you do that a bunch of times, and if you do that like enough time, as it allows you to get like 10 to 20x leverage, depending on the amount of like the max loan to value ratio that you can get, which can get like a little bit insane. And like, that's super degen. Like that's the most degen thing that I've done in the past. There's a couple of protocols that, do it for you. As Alex mentioning, Kamino has a mode for that, which is great. And then you can set like your own parameters. The way that we do this at Gauntlet actually is like, we don't really have a lot of like looping strategies like this because they're way riskier than regular strategies. Obviously, like the more you loop, you get like a exposure to tokens. If you do that with like uncorrelated assets, then like if the price moves between those two assets, like your position will get liquidated, you're going to get wrecked. And so I got wrecked a couple times on those. Which happens. And so like even I as a pro user, like just one interesting thing on Stream Finance, there were a couple of like wallets that you could see on DBank. It was super interesting to like look at all the positions that were set up. But anyway, the way we actually use these types of strategies is we use them with real world assets, right? Because DeFi allows you to do this like super easily, right? Like on Kamino, it's literally 2 buttons, right? What that also shows is like how this infrastructure enables you to lend and borrow like super easily, right? And like without all the burdens, like if I wanted to, I don't know, if I wanted to loop stuff with my bank, so like if I wanted to like, put my stocks as collateral, like borrow, I'm in Canada, so like CAD against it and then buy more stocks, like my banker would probably tell me no, like, I don't know, haven't asked. But it's cumbersome, right? It's a lot of burden. And so one of the things that we have in terms of strategies is we have what we call levered RWA strategy. So RWA stands for real world assets. It's basically tokenized versions of things that you would find in the real world, so like tangible things. And by tangible things, I mean like, financial shares of positions. So for instance, we do that with Apollo, which is a big private credit company in the US. And so Securitize is issuing a token called ACRED, which is basically tokenized representation of a share of private credit at Apollo, which is $1.5 billion fund. So it's permissionless KYC, right? In order to actually access this private credit or even access its tokenized version on chain. Like you need to know for like a KYB process or a KYC process, et cetera, et cetera. But the on-chain and DeFi infrastructure, what it allows us to do is basically create like a looping strategy for a token like ACRED, which someone in TradFi could never access. And so obviously we're not going to loop this to like 10x exposure, like it would be dumb and very risky, right? But we manage leverage based on the deposit and borrow position. So underlying, it's interesting because there's so many moving parts to this. It's actually fascinating. So we have this Apollo private fund, right? We tokenize it into ACRED. Now we have there's like a market on Morpho that allows us to lend at ACRED and borrow USDC against it. And actually, as a user, you can lend against ACRED because we have like a vault that we create on Morpho called RWA Vault. This is where we borrow the ACRED like from. So if you want exposure to like private credit off chain for like a tokenized version, you can actually supply into that vault. But back to the ACRED thing. So we supply ACRED into this market. We borrow USDC against it, which allows us to buy more ACRED. And so basically what it allows people to do is like, instead of just holding shares of private credit, they're able to get amplified exposure to this private credit through on-chain strategies. And so this is kind of like, it's a use case. Like you may see it as like a little bit niche because it's permission, it's one fund, it's a big fund, but it's one fund and it's one use case. But it really shows how like DeFi rails could really, really be interesting for TradFi assets, and really enable like a whole slew of new strategies for real world assets on chain, and how DeFi rails are like amazing and like, you know, enabling all of this without having to sign, like, I'm not a permission user, like I cannot get into a poll fund, but like I can guess that if I wanted to, you know, borrow against it and then loop back in, I would have to sign like millions of papers and, you know, I get a counterparty to agree to lend me the money against it and things like that. But we can just do so through DeFi rails really easily, seamlessly, and we can actually adjust the leverage and the exposure based on all the data that is on chain, so like the APY, the borrow rates, et cetera, et cetera. So this is something I could nerd out about for like hours because I think it's like fascinating, especially with all those institutions moving to DeFi. But it's just, I think it's a really cool example to show us like how efficient DeFi rails are and are getting. And it's been years now that these are running, like, not all of them are running flawlessly, but like some of them have become like really robust and actually have years of track record under their belt, and that we're able to run like to create strategies like this, to me is really, really cool. And we're only just getting started right now, especially with all institutions like moving into blockchain. Like we're working with WireX, we're working with Altitude. Like now business accounts on these apps will get access to DeFi yield. Like this is, it's a lot of really cool stuff. Even we're working with Cast as well, which is like a banking app. And so launching soon, gonna tap into yields from Kamino on Solana, which is super cool. I also think it's super cool that it's like across different chains. I mean, personally. So anyway, nerd ramble over.
I can tell how excited you are about it.
Yeah, I mean,
I love
it's
it.
crazy like where DeFi has come, because I mean, like Aave is now large enough to the point to be considered a top 50 US bank, which is crazy in terms of like the amount of money that's in its lending and borrowing platform. And you're just going to have more DeFi products start to creep up into that kind of territory. I'm curious, Simon, how you think and how you see traditional institutions kind of adopting DeFi in like the first wave. Like, I mean, we all know that we're right around the corner from some large and multiple large financial institutions announcing some new product or exposing clients of theirs to an institutionalized version of your Aave, your Morpho, your Maple, your Kamino, something like that. So how do you think that exactly looks like in the first initial rollouts and phases?
I'm not really sure.
Okay.
Like, I don't know what that's going to look like. Well, my best personal guess is going to be like slowly, then suddenly, like the trope and the meme. I think we're seeing this like definitely ramp up in terms of, interest and collaborations and partnerships. And like just the sheer size of them, and like there's really been an increase, especially recently. So I think it's going to continue to happen. I think it's going to definitely be a big theme of 2026, which is institutions coming into DeFi. I think we're going to see many of them, I think I'm really excited about this.
Any guess on who you think might be the first major financial institution to kind of plunge into the deep end? I
mean, I would argue that Apollo is already one, which has been great to work with them. They're significant, no doubt. I think BlackRock doing a lot more DeFi stuff is also very indicative of what's going on. Like Robinhood's indicated very, like,
yeah, very true.
Of course. So there's already some big ones. Even I believe Morpho has been working with a French bank. So things have been happening over the last year. So things are definitely happening already. Now I guess it's just a matter of time, because there's obviously already been product market fit there.
We've all been trying to get the Morpho folks on the show. Would love to have a conversation with them at some point.
I would love to. I haven't been trying though, so
yeah.
I don't make it sound like I'm working that hard.
Yeah, that's true.
That's not to say I don't want them here. I'm just saying, like, I have not been bothering them, but they're on my short list for sure. Especially
every now and again. It's like, hello, still here. We'd love to talk.
Some of those protocols, man, they're tough. I want to highlight this comment on TikTok because I think it's really, really good. From Lynch over here. What everyone fails to tell you is that hardly any of these tokens are needed for these companies to operate. And I think based on the follow-up comment about XRP here, that they might not exclusively be talking about the specific kinds of tokens that we were just discussing, like on these protocols themselves. Because what's actually interesting is that in general, I think you're correct for the record, for the most part.
Absolutely correct. I would say for the overwhelming majority of tokens that have been created, they do not need to exist.
No, there's a tremendous number, millions upon millions of tokens that don't do anything for anybody. But on these DeFi protocols, I would actually argue in the opposite, that you have examples of them being done poorly. We are going to continue to pick on Stream because it's a perfect example. XUSD, useless, awful, bad product. But if you're talking about like a liquid staking token for, staking something with one of the staking service providers, or if you're talking about a collateral receipt for vault provision, for example, I think those are examples of really, really interesting and purposeful things to create a token to represent. And that's kind of the magic of a token in general. You can take a thing that was, until tokens became possible, impossible. Straight up, you couldn't do it. You couldn't represent it with a thing that could be owned, with a thing that could be transferred, with a thing that could be identified as being real. And now you can. So you can take an idea. This is the part that geeks me out. You can take an idea, the intangible, create a token for it, which is tangible, and then do stuff with it. You can leverage things that you would never have normally been able to leverage with a much lower burden of proof that the thing is real because you have the token to prove it. For example, let's get in the weeds for a second. One of the things that you hear tossed around a lot with regards to blockchain and cryptocurrency is the ability to bank the unbanked and give people who don't have access to good data and record storage the ability to do that. Think school transcripts, think the deed to your house, think all sorts of stuff like this. You can create tokens to represent those things, and you can use them in DeFi, theoretically, if a platform wanted to enable that. The ability for you to leverage the fact that you have a degree. There is totally a world wherein that becomes a thing that you can leverage inside of DeFi to get an amplified yield for student discounts or something like that. And you could effortlessly prove that you had that. So in that sense, I would actually push back to say that with regards to this particular topic, there are some unbelievably exciting things that have been tokenized and tokens that exist that allow you to do stuff that you would never have been able to do in any other sense. I just think that is the coolest shit ever.
I agree.
Man. Simon, I want to be mindful of your time because you mentioned that you had about an hour. Do you have a few more minutes to close out with some final thoughts and anything else that you feel like sharing that we didn't get a chance to cover tonight?
Yes, I don't have anything particular to share that we haven't talked about. Again, I would encourage people to read, to go to our Vault book. I think it's a really, really good resource to understand like what we do.
Question for you on that.
Yes.
There was someone in the audience was trying to download the stress report, and there was a comment or a message that they got back about the particular email address that they use. Are there any specifics with who can download it?
Yes, I think there's a setting where it blocks any kind of like generic email addresses because we had a lot of inbound. if you have a business email address, try that. I can only encourage you to give away your business email address if you don't want to, but it would definitely be more likely to work. I think it's the settings with the tool that we've used that actually blocks some of that. So I apologize for everyone that cares. I can probably send a PDF somewhere somehow for someone to get it.
Don't worry. I've got it. If you would like to read it and you don't want to toss a work email address in there, head on over to community.rumshq.com, which is our free to join educational community, lives over in Circle, and I will share the PDF there for anyone who wants to read it.
That sounds great.
Sorry to interrupt.
No. That's so good. It's a perfect solution. I was trying to find a way where like maybe I would send you the PDF and you could end it. Yep.
I got you. No worries.
Awesome. Awesome. No, I think that was great. Thank you so much for having me. I really appreciate it. And yeah, if anyone has any questions, I'm on Twitter at 0xsimo with a 0 instead of the O, which I know is not the easiest. But you can also find like Gauntlet.xyz and follow us on Twitter is where we're most active. So give us a follow, visit our website, visit the Vault Book, learn more about what we do. Yep, this is me. If you have any questions, feel free to reach out. And yeah, I hope that discussion was insightful, and I didn't say too many wrong things.
That was great, and I'm very glad you said your Twitter, because I was about to ask you, because I actually didn't know it, and I went to tag you in the repost earlier, and I was like, oh, shit, I don't know the handle, but I got you now. So if anyone has any questions that they didn't get a chance to, or they think of one later, just let us know. I'm fortunate to be able to reach out to Gauntlet and ask your questions, so we will get you answers, certainly. And again, Simon, I really appreciate how much time you gave us tonight. This was awesome. I love a chance to dig deeper into the world of DeFi, because I believe it's inevitable. I believe that it is the answer to a lot of the problems that we're constantly running up against. I think it's the answer to the system that keeps people confined and shackled in place. And anything that we can do to help spread more awareness of how many products are out there. The fact that this is exactly what banks are doing with your money right now, and there's no reason that you shouldn't be allowed to do it yourself, because it is your money. Yeah, it was awesome. I appreciate it, man.
Awesome. Yeah, thanks for having me.
Thanks for chatting with you, dude. Great knowing you. Or great getting to know you.
Same. Thanks both.
English, man.
See you, man. Awesome. All right.
Nailed that goodbye.
Yeah, you did great, dude. You definitely didn't embarrass yourself and bring shame to the family.
Hell yeah, tight.
Man, that was a lot. I feel like we definitely have some stuff to unpack there. There was a lot of jargon. There was a lot of more kind of advanced strategy talk, which honestly, I don't think we get to do enough of. And I know that there's people hanging out, people interested in taking this, like, up a couple of steps on the ladder to more advanced DeFi solutions. And
yeah, if you are, used or in a position where it's like you're really just trying to learn DeFi, this is a great conversation to be like, all right, let me get exposed to a little bit of the deep end of it, listen to a lot of it. You're not going to understand a ton. Write down some of the stuff that you hear on a notebook, and then you have a bunch of homework to do. And it'll be a great way to go from, hey, level 1, and now I'm listening to a level 5 conversation. Give me the stuff to understand how I go from level 1 to level 2 to level 3 in terms of my understanding of DeFi and how it all works. And it'll more rapidly progress your understanding of DeFi, what platforms to explore and use and understand a little bit more of the nuance, and ultimately be a more informed consumer of these types of products, which ultimately makes you a safer user of this kind of stuff. So it's always good to listen to conversations where you get confused and know nothing, because it gives you homework and then you rapidly advance.
Yeah, it's a deep pool.
Yeah. It's also like when I have conversations with, I always think about speaking with, and hang on, I just realized my phone's on. So if someone called, they just would have blasted right into this microphone. So luckily, thankfully that didn't happen.
Thankfully, we don't have any friends.
Dude, it's not friends. It's business partners
That's a joke because every time I talk to Will, he's doing something with a different friend group.
This is true. I actually have a friend pipeline. When people complain about like not being able to make friends in adulthood, my friends all turn to me and go, "Yeah, except for Will." And I'm like, "Hello." I have what is called a friend pipeline where I'm always just turning people into new friends. Anyway,
He's just such a guy. I mean, look at him.
Hi. You want to be my friend? I really enjoy going up to people, and if they like seem like a quiet little nerdy, I always just I'll ask this one question because this dude like absolutely lit up one time. Funny enough, his name was Alex too.
Good strong name.
Good strong name. Also, I had lunch with my with another one of my best friends whose name is Alex. Good strong name. Good strong name. But it's if you ever sense someone's a little nerdy or whatever, just go, hey, like what nerddom, what slice of the nerd pie is like your nirvana? Like what's the happiest? And I had this one guy, Alex, go, dude, I've never had anyone ask me that before. And I was like, oh, dude, what is it? And he goes, dude, it's Stephen King. And I was like, oh, dude, that's awesome, man. I haven't read much Stephen King. Can you tell me about why you love it so much? And he was like, yes. And just like blew up about his like passion of Stephen King books and why it's awesome. And I was like, dude, that's fucking sick, man. What do I got to check out? And he's like, you're interested? And I'm like, yeah, sure. You're so passionate about this. How can I not be interested in like checking out something that makes somebody so passionate about something?
Letting people,
that's so awesome.
Letting people talk about the thing they're obsessed with is enlightening. And I can confirm that strategy works. I had someone once tell me that they were getting into Commander Magic, and all you have to do is ask, oh, who's your favorite commander? Which commander do you like to play and why? And then boom, done. That's it. Yeah. Instant friends.
Instant friends.
Invitation to the play group.
You let me talk about the thing I love the most. You're my best friend now.
Nailed it.
Yeah, dudes, we know how to be friends, which is a Family Guy reference. But I was talking about something else before. What was I talking about before?
I don't know. Who knows?
God, it's gone.
You know, maybe this is part of it. I don't remember if this was exactly where you were going. We were just talking about the ability to take, the entry level understanding of something and then how to advance through, up the ladder. Then we were talking about, that's all I remember.
Yeah, it's gone.
Climbing the DeFi ladder.
Climbing the DeFi
Why
ladder.
It's important.
Anyway, I just wanted to talk about how many friends I have.
Valid. Will, you know what I was thinking that we could do a little bit for the back end of the show here, something that we haven't done in a hot minute, and we're in the perfect mood for it. Given that we just discussed DeFi at length, given that we also got a chance to talk about specific kinds of and interesting tokens involved with DeFi, it might be kind of cool to open DeFi Llama and look through the top protocols in certain places and find one that we don't recognize and look into it. And
I don't think so.
Do like a little first impression analysis of the new DeFi place that we've never looked at before.
Oh, sure, might as well. Do you want to start on Ethereum? I'll start on Solana. We'll see what we'll find. And
let's do it.
All right.
So for anyone who wants to follow along at home, if you go to defilama.com and just right off the homepage, there are a ton ranked by TVL, total value locked, up at the top. Just pick the ecosystem. And dude, you know who's climbing that list is Plasma.
Plasma. I was just about to say Plasma's right here. Actually, I'm gonna hop into Plasma real quick.
Yeah, take a look at that one.
Plasma's at 3.2 billion.
Oh, they rock. I mean, look at that. Look at that climb, though, in TVL.
XPL. Hang on a second. Come on, load. Or maybe it's not working yet on DeFi Llama, but look at that immediate jump in September from 5 million up to 5 billion.
Woof.
Oh, God. And then slid off just because markets went to shit in October, so that makes total sense.
Yeah, to be fair, everyone slid off a little bit.
Yeah.
So money has left the market.
Plasma. App revenue.
Here, I'm gonna do a quick keep it right there for a second, Will.
As if I was gonna go somewhere else.
Well, you know what I mean.
Let's see what's growing the most. Whenever I come on to DeFi Llama and I start looking through.
So really quick, scroll back up. That's why I told you to stay, and you said as if I'm going anywhere. Okay, so this little section right here. Sorry, it's focused on my finger. gives you like the quick snapshot of whatever thing we're looking at. In this case, the Plasma ecosystem. So it gives you a whole bunch, app revenue, protocol, like fees generated, TVL, volume, all sorts of stuff. Great place to get like your initial batch of info. Over here, you've got a chart displaying their TVL, and you can toggle between different currencies to measure TVL in. And as Will likes to remind us, it's not always a great idea, or rarely is it a good idea to look at the TVL in terms of dollars, just because the price of these assets fluctuates so much that you'll see unfair changes.
Right now, when I go to the XPL token, though, it doesn't load. So DeFi Llama isn't perfect. Sometimes the APIs don't work for certain things. But
well, and two, they will not display things that they cannot easily and readily verify on chain, and things are constantly being tweaked and worked on. Because shout out DeFi Llama, you don't have to pay for any of this. You can look at all this for free without making an account, and for that we love them.
Yep. Right now, fees being paid out. Clear winner is Aave. So Aave and Plasma, also Fluid. And as you come and scroll down, you'll see all of the various decentralized applications here. And this is honestly where I have made a lot of money, is in a bear market, finding what DeFi applications in hot ecosystems that are growing are doing really well and have a token. And I like to look at this section here that shows percentage growth, because you want to see what's starting to dominate the market. And in this case, in the Plasma market, if you will, if you want to use that term, not necessarily perfect. But over the past month, like Aave has been growing a lot. Pendle's been growing a lot. 36% growth over the past month for Pendle. Very impressive, especially given market conditions. Over the past month and over the past week, really, where the growth has come, Fluid. And I'm not familiar with Fluid. Hang on a second. Let me go click on Fluid and just see what it's about. An ever-evolving DeFi protocol and financial system of the future by Instadap. Immediately makes me bearish. Hang on a second. Fluid website, financial system. Oh, lend, borrow, and swap. Okay, it's a lending solution. How many chains is this on? I think it's just on 5. It's on Polygon, Base, Arbitrum, Plasma, and Ethereum. Interesting. With 500 million TVL. I mean, it's generating 62 grand in terms of fees a day, which is pretty good.
That's not bad.
That's not bad. So Fluid's generating revenue. It's getting growth on Plasma for sure. Fluid should be something that is interesting. I'd be curious if they have a token or not and what the tokenomics are. But again, these are the questions you ask yourself. You go, okay, there's growth here. Let me see if it has a token. Sometimes it doesn't. You go, okay, not something to invest in, but maybe it's a solution worth checking out to use. And if it does have a token, then you start diving into the white paper, or just ask ChatGPT or whatever, like, hey, what are the tokenomics of it? And it'll pull it from the white paper in most cases. Researching cryptocurrencies has certainly become easier with ChatGPTs. Let me see who's come down here. We have the Plasma saving vault, but not good growth. Let's see, what else is growing well? Yuzu Money. It's growing well, but here's part of the issue. Is it only has $20 million in TVL. That really shows you that it's like really not getting adopted at all.
What is it? Like what kind of platform is it?
Yuzu Money. It's for yields.
Oh yeah, you definitely want to see TVL be a little higher for that.
You want to see it be higher there. So on Pendle, I mean, it really kind of drops off. You really just have like 1, 2, 3, 4. I mean, really, it's just 1, 2, 3, 4, 5 decentralized applications that are really being used, from Plasma Saving Vault to Vita, which I also am unfamiliar with. Let's see, what's this guy about? Vita is the leading DeFi vault platform. Oh, that's a lie. Enabling crypto applications, asset issuers, and protocols to build consumer-grade cross-chain yield products. Again, the #1 solution out there in the world for that is Morpho. Vita's technology is powering many of DeFi's largest vault. Blah, 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 blah. Okay, I've heard enough. But in terms of the amount of Ethereum, the amount of Ethereum is going down. So since June of this year, it's really been seeing a loss of users. And the June timeframe is very important because the markets were still doing well at that time. So adoption for Vita is going down. I'd knock this off of my list. I'd pay attention to it. Really, especially, in the last month, it's had minus 30%. So Fluid, Pendle, and Aave are the big winners on the Plasma ecosystem. Fluid is something that maybe there's an investment opportunity, maybe not. I don't know if there's a token for it. I don't know what the tokenomics are, but it'd be something where the next step would be I would go and research that. So that's what I get out of Plasma.
So fun fact, Plasma is coming on the show relatively soon. I have a couple good friends that work over there, and been haranguing them to join us. So they're all doing a little bit of travel right now, and then we're gonna snag them. But I'm pretty excited about it. It's a big stablecoin play.
Yep.
It's a layer one for stablecoins is kind of the pitch on a bumper sticker.
Now I've hopped over here to Solana, and here's a great example. So USD of Solana, up and to the right for the most part, but the amount of SOL is what you really want to be paying attention to. And look at that, way different. Alex, do you mind just showing that to folks on TikTok? So again, I'll show the USD. And if you take a look at the USD, you'll see like, oh, hey, it's like really, really strong. But then, markets turn around in September, October, and it really starts to kind of decline a bit here. Hang on, Alex.
Hold on, I'm coming.
Nope, I got it. So you can see, US dollar wise, it starts to go up and to the right, but then it's like, hey, there's some weakness here. Okay, like that's nothing particularly great. But then you look up the amount of Solana, and dear God, it is just up and to the right. And that is how it tells you that the adoption is truly phenomenal on Solana. If I scroll down here, something's wrong with the API on Jupiter right now. But Kamino over the past month is up 10% in its usage. Sanctum is also up basically 10%. What is Sanctum?
Worth noting that personally, for a good protocol, like one that works well and is just reliable, this is what I would want to see at a time when the market is doing what it's doing, because you have like two things. You have people capitulating and selling assets and running, and then you also have people who have the thing and are now not interested in selling it, so they're going to put it to work for them for as long as markets are sideways, flat, down, suppressed, whatever. And so if you have a pile of SOL that you are not interested in selling, but you don't want to just waste all this time, throw it into a liquidity pile over on Kamino, or lend it out, or stake it here and restake it there, whatever. That makes perfect sense. Love to see it.
So Sanctum is a liquid staking platform, and it's actually larger than Jito right now. Jito has seen a loss of 8% over the past month. Sanctum has seen a gain of roughly 10% over the past month. That's interesting. I'd have to dig a little deeper to see why.
I've looked at them before, but it's been a minute.
00.
Oh yeah.
I'm unfamiliar with 00. You sound like you certainly know what
yeah,
they're all
easy
about.
to mix up because there's Sub-Zero, 00, Layer 0.
Okay.
Yeah, so there's a lot. But yeah, 00 was a consensus sponsor earlier this year. That's where we saw them doing some interesting stuff.
Mm-hmm. Okay. Radium, it makes sense for Radium to go down. They're a decentralized exchange, so if the market gets worse, people will use it less. But in the bull market, you'll see Radium up near the top, if not number one. Jupiter would probably remain number one, but Radium will be right there. Marinade, 5% growth over the past month. Drift also makes sense to see a loss there in the perpetuals exchange market. Orca's always up pretty high, but let's see. Let me see if we scroll down. Any big winners? There's an RWA play that has $142 million called X Stocks with an increase of 38%. I would imagine this is tokenizing stocks based off of that name. The amount of Solana in it up and to the right pretty aggressively. Freely transferable tokens that can be used in lending protocols on decentralized exchanges in a DeFi app. Hold them in your wallet or buy one venue and sell one. Oh, interesting. It's not. Wait a second. This is a lending protocol that's classified as a real world asset play called X Stocks. For some reason, I don't believe that. X Stocks, tokenized stocks and ETFs. Okay, something's incorrect on DeFi Llama. So, lending the future of tokenized equities. Okay, the U.S. stock market on chain.
I really wish people would stop naming stuff with a little X before the name.
It's so fucking Stupid.
I'm so over it.
No more waiting days for trades to clear with X stock. So stock trading 24/7 markets. Okay, setting new standards. It also kind of makes sense to see a play that is focusing on tokenized stocks to be going up, to be up 38%, because stocks have been outperforming crypto like crazy over the past number of months. So it does make sense to see people fleeing to stocks.
The first thing that I think of
Stock
when I
market
see
was down to 1.1% today. Ugh.
when I see a project like that is just like I feel like the big centralized exchanges are going to absolutely eat your lunch.
Yeah, I mean, that was the announcement from Coinbase.
Yep. And Kraken's done it for a while already.
Yeah, so for those of you who weren't aware, Coinbase is now going to be offering stock trading as well. So stock trading, crypto trading, and they made a third announcement. I don't know. The big thing is that they're also offering stocks.
Prediction market?
Prediction market. Yeah, it's just Kalshi. Or Kalshi.
Yep.
Just the Kalshi prediction market offered through Coinbase. So hooray, more gambling.
Huzzah. So
Good.
I grabbed
Don't worry
one
about
that
it.
has been on my list to look at for a hot minute, but I actually want to highlight something on their DeFi Llama profile page before we look at their website. So let me toss this one up
Your
here.
president didn't say nothing in his allocution about crypto. Yeah, I mean, like, why would he? It's an address to the nation. Why is he going to talk about crypto? Did he declare war against Venezuela? Did that happen?
No, that requires
That's what I thought he was
Congress.
going to say.
This is sans Congress. Okay, so yeah, I don't know. Sorry, I couldn't care less what he's bloviating about. All right, so this is Sky, which I've had on my list to look at for a minute. A couple interesting things, and let me swap the TVL over here from dollars to ETH. Okay, so overall downtrend, but a recent uptick since. Oh, actually, this is since September, so that's a couple months. But look at this. This is interesting. So let me put it back in dollars for just a second, because that's how I would rather look at earnings. Look at this. So they have a token, which is why I flagged it as interesting, because we're looking for tokens that could be worth a look. And for the record, no affiliation with Sky whatsoever. I picked it out of a hat because they're massive and I don't know anything about them. And I thought it would be a fun one to first impression. They make a tremendous amount of money, annualized revenue over 160 million, with a lot of that going back to holders, which, for the record, is the way that many of these like protocol level, governance or protocol related tokens work. That in exchange for you holding it, there are revenue share opportunities. And so it depends on the protocol, because are they making any revenue? If yes, cool. If no, who cares? But this one specifically has a holder's revenue annualized and drawn out over 30 days a week, 24 hours, and cumulative, which I have not seen before as a specific category. So that's kind of neat. And it's a shitload.
What's Sky on? Or is it on multiple blockchains? It's on ETH.
It's on Ethereum. Single chain. So if we were to, let me share this tab. It's a savings account. It purports to be a decentralized app that you can run a savings account on. And so, of course, the thing that you want to understand there is, how does it work and what's my yield? This looks to be relatively in line with a high yield savings account. Now on the little bit upper end, because those rates are kind of coming down, but tremendous amount of TVL. This is not what DeFi Llama is reporting. So I think that this is probably the same way that like Aave does it, wherein they also, what's the word? Oh my God, what's the word I want? When Aave talks about their TVL, they talk about like 55 billion. That's including Lens, active Lens,
so that
Lens and
probably
borrows.
includes the active Lens.
Yeah, probably. Because the Llama is reporting still a significant number, but only like 6.38 billion.
Dude, the Sky token has also been massively outperforming the market.
Really?
Yes, since November, what's this date? Hang on a second. November 21st, it's up 44%.
Jeez.
It's up 44% since November 21st.
Dang.
Yeah. I mean, if you have money going back to holders, that's the exact kind of revenue model you want to see from something that makes money.
That's true. Okay, so here we go. Inside of the app itself, there's a whole bunch of stuff. So it looks like, okay, so they offer a pretty high rate of return on Sky with Sky. So it looks like they're using that token to access amplified rewards on platform, which that sounds about right. We're seeing that with Katana. We see that with frankly, a whole number of DeFi protocols. It's the way to naturally bake in an incentive mechanism to get someone to hold a token that they might not normally be interested in. Dude, look at this. Cow is here again. They are crushing it right now in terms of like being adopted across bigger protocols. That this is
Dude,
who.
How have I not heard about Sky? This is why you got to check DeFi Llama like at least once every other week.
I'm telling you, you got to just dig around in there and look at the protocols list, because you will find some good stuff there. That's how I found.
What's the market cap on this coin? God damn.
It's not nothing.
It ain't nothing.
That rate is bonkers. 15.7% on Sky deposits.
Oh, interesting. This is the number 50 largest ranked cryptocurrency right now. Market cap of 1.3 billion.
Sorry, what number is the rank?
50.
50. Damn, that's up there. Okay.
It is up there, and to put that into context, it is now officially larger than Ondo.
Woof.
Yeah, let me put that on my watch list. Thank you very much.
Yeah, no, you're...
yeah, it is sandwiched between Ondo and KuCoin token.
I am immediately more into this than I am,
Yeah.
honestly, either one of those, to be frank.
No, I'm way more interested in Sky than Ondo or ICP. Or fucking ICP.
Also that.
KC.
Freudian
also
slip.
That. Freudian slip. I'm certainly more interested in the ICP. Interesting. This is cool. Hang on a second. You keep talking about the DeFi thing. I'm gonna start looking up the tokenomics of this.
Yeah, no, I'm curious, because I haven't dug. I'll tell you what, I will be the sacrificial lamb. I'm gonna mess around with the actual app tomorrow, and then I'll let you guys know what I think of the actual experience, because I've never touched this, I've never connected to it, never interacted with it in any way, shape, or form. But I gotta say, it looks nice.
Yeah, in Marley Coulter, it's Sky. Does it have a longer name than that? The ticker is SKY. Is it just Sky?
It's just Sky. Yeah, the
Sky.
URL is sky.money.
Sky.money. That's fucking sick. Although I am so over the dot, and it's not something that's just .com, but at least that's good.
Welcome to crypto, where we've domained everything.
Crypto, where everything's fucking stupid. But sometimes you land on gold. Sky.money is solid.
It is funny, though, because every time I'm in a conversation with someone where I talk about, like, oh, yeah, I run a decentralized savings account. It pays me way more interest than any bank ever did. Oh, really? What's it called? DeFi Carrot?
Dude,
I'm sorry,
wait.
what was that?
What was
yes,
that?
it's named after a vegetable.
It's named after a vegetable. Yeah.
I don't know. They thought it was funny.
Oh, I use Fidelity. What do you use? Pancake Swap. I use Pancake Swap.
We are so unserious. Oh my god.
Anyway, this is the future of I'm gonna go back home. I'll talk to you later.
This is the future of money, guys. Pancakes and
fill
carrots.
Up my job application at McDonald's. Excuse me. Dude, check this out. The total supply of the Sky token is 23.46 billion. The circulating supply is 22.94 billion. There's basically zero inflation right now of the Sky token.
Shit. How is that possible with a rate like that?
I don't know.
See, okay, now I have questions, because where is that coming from if there's no... That would imply that there's some pretty heavy duty, like, buybacks and reissuance.
Well, if it's revenue, then
yeah,
it's fee generation. And they have a shit ton of revenue that they're generating, so that's what the yield is.
That's true.
I mean, that's pretty simple, unless it's something different.
Yeah, I'm gonna... Remind me to How do I
Wait,
get a
hold
hold of these
second,
people?
Hold on a second. Now I'm seeing different things. Hold up.
See, I don't know anybody who works here, and that's weird for me. I need to find that.
I'm Alex. I know some people.
I do know a lot of people, but I don't know anyone here.
You do know a lot of people. Hang on. It almost seems like it's too good to be true.
What the heck is their Twitter? Where are you? They have heavy amounts of education on their website. I love that huge
like that.
FAQ with like pretty decently written answers. I like that a lot. Okay, all right, found the Twitter.
I like how it's now just been like us being like, wait, we gotta research this shit, and it's like we'll get back to the show later, everyone.
No, this is what I wanted. I wanted us to find something interesting that all of us can geek out about together and poke into, because again, I saw this thing and the size of it, and I was like, how the hell have I never researched this thing before? They must be doing something right.
So here's
Clearly,
the revenue model.
Okay.
So the revenue model is very similar to MakerDAO. Revenue comes from protocol activity. So Sky Protocol, which is the full name, Sky Protocol, which evolved from MakerDAO. This makes sense.
That makes more sense.
Now this makes sense. This was MakerDAO.
Gotcha. Yeah,
And
Daniel just pointed that out in the
uses-
comments too.
Yeah, and now thank you so much. And now uses USDS as its stablecoin and Sky as its governance token. Generates revenue in basically the same way Maker did, by collecting fees from system users. This makes sense as to how this got so big without us knowing about this. Here we go. Primary revenue sources: interest and stability fees from borrowing USDS, fees from PEG maintenance mechanisms, and buybacks, token retirements funded by revenue. So the protocol uses its fee income to buy back Sky tokens from the market, shrinking supply and potentially boosting value per token. Quarterly revenue recently reached record levels and projected revenue over the next year. But how often does this buy happen?
Worth pointing out too, you said PEG maintenance is in there?
Correct.
Okay, so
just like Maker System, the protocol collects fees tied to keeping the USDS stablecoin pegged 1-to-1. Those fees go into protocol revenue.
So for anyone curious, what that means effectively is that in order to maintain the peg of a stablecoin behind the scenes, there's usually a tremendous amount of arbitrage buying and selling of the backing assets in order to keep that stable. And so doing that with the backing assets required to legally run a stablecoin at this point, that generates fees and revenue. So in a way to share that without having to share the yield, which Genius is trying to squish, that's pretty cool.
So there is interesting, because this is just a governance token, but it's a governance token with a buyback and burn, and they use their revenue to pay staking rewards, buy back the Sky token, and they don't say burn, they say retire tokens. It's the same thing. Fund ecosystem growth and reward governance participants. So with the amount of revenue that they make off of what was MakerDAO and now Sky, it seems to be some significant rewards. So now I'm curious to break down what the rewards are actually like.
Yeah, and that's what I want to see what the onboarding experience is like, and what the providing experience is like, what the dashboard looks like when I'm running a position,
Man, what's
all that
the
sort of stuff.
revenue?
So I will do it and report back.
Yeah, let's see. Revenue. Annual revenue is $100 million. Sorry, 162 million. Holders revenue is 100 million.
131 cumulative too.
Interesting.
Just since that's over a year.
Yeah. Let's see.
Solemn says call them on the phone live. If I had a phone number, I'd do it. Hey guys, we just discovered you have billions of dollars. We'd like to talk.
We'd like to talk.
What are you doing right now?
They're like, who are you?
Do you want to come on my fake radio show and talk to the people?
So I don't know if I believe that from ChatGPT. I prefer DeFi Llama. So let's just go with $160-ish million a year.
I'm currently digging through their followed list on Twitter to try to see who our mutual friends are. Ooh, okay. I found it. Yeah, I know how we can get them.
What are the...
Ooh, several avenues. All right. Yep. Sweet. Okay, mark my words. I will get a hold of them.
I absolutely believe that you will. So here's the thing. So if you stake Sky tokens, according to the official dashboard, you are earning about 15.7% APR. Again, that would be paid to you in the Sky token.
Yep.
What
are you providing to earn that? Are you providing Sky, earning Sky?
That is a reward for participating in governance.
Gotcha. Okay.
And that's really good.
Does it say anything about like the quorum required to meet that threshold or anything like that?
I don't see that yet.
Okay. The fake radio show, if you haven't heard that inside joke, is a reference to our favorite hate comment we've ever received. Go ahead.
What was that? What was our favorite hate comment?
What is this fake radio show? And we've just sort of leaned into it.
What is this, a fake radio show? And we're like, that's perfect. And they're like,
Nailed
no,
it.
that was an insult. It's perfect. So staking rewards are 15.7%.
Okay.
Sky token rewards for participating in governance is an additional 4.42%.
Woof.
Yeah.
Okay.
So, I mean, if you're staking and participating in governance, you're earning over 20%.
Here's why that's cool. If you had a token like this, you might, especially like seeing current returns, the fact that it's outperforming the market, that might be tempting. The first thing that I want to know whenever I see a token like that, especially something in and around DeFi, I want to know, what do I have to do to earn it so that I don't have to buy it? What can I do to get in there and like start doing stuff so that I can start accumulating it without having to go purchase it? You know, I might, if I feel real strong about something, I might buy a little, assuming that I can. But I always want to know, what do I have to do to get involved with the protocol to earn it for either for free or using something I already have on me? Can I just set some of my stablecoin pile in there and start farming it? That's always the direction I go.
Yeah. Now the next question is, what is the inflation like? Is Sky deflationary because of these buybacks? Because they make $160 to $130 million a year? So since February of 2025, $92 million has been spent on buybacks so far.
So, wait, since when?
Since February of this year. 92
Jesus.
million. That's impressive. So that has repurchased basically 5.5% of the total circulating Sky supply so far. That's wild. Buy the Sky token. Put a little star by that, a little star by that. Gonna underline that a little bit. Okay, Sky token. Looks like I'm gonna grab a bag of you at some point. Who'd have thought I was gonna buy into MakerDAO? I never would have fucking thought that.
Well, I mean, dude, that's an OG.
It's an OG.
That's old. The first follow account that I saw on them is Curve. So like this is old school Ethereum DeFi. So I guess the rebrand makes sense. I don't know how I didn't know that rebrand had happened.
So
speaking of rebrands, you know who else did one?
Who?
Polkadot.
Are they no longer Polkadot?
They're no longer pink.
Fucking who gives a shit? What are they, yellow?
Black.
Oh, cool. Sick. I bet you love them now, Alex.
I like pink better for the record.
You do like pink.
No, I just think it's funny. Like, okay, listen.
Wait, now I have to go to the Polkadot website. Hang on.
Oh, you're in for a real treat. Marketing 101.
Am I?
Okay? Never waste a good event. If you're rebranding and someone who's as plugged in as I am doesn't know about it until 2 days later because a friend told me, you did it wrong. Yeah.
Guys, this is their website. It just looks like they finally ran out of money.
Protocols for prosperity. What that means, though.
This is, and then just follow us on Twitter. Like, yeah, this just makes me feel like they finally gave up.
Guys, Polkadot, listen to me. This is from love. This is from a place of love because I genuinely do love and appreciate
Jesus Christ, Polkadot.
you as an ecosystem. I've met a number of developers. I've talked to your grants department. I've talked to your marketing department. I've talked to even more of your builders. Guys, please. Like at this point, I'll do it for free because you gotta do something. Oh, what are we doing? what the hell's going on? You know how much promise that place had, like just a few years ago. I mean, here I was, dude,
just like 4 or 5 years ago, everyone was like, it's Polkadot and Ethereum.
Yeah, there was no reason at the time that shouldn't have been the biggest thing, and then they just decided to, I don't know, go dark for years. Haven't heard shit, despite millions, tens of millions of dollars being spent on marketing, whatever the fuck that means.
Mm-hmm.
Oh my God.
By the way, the Sky buybacks happen weekly.
Okay.
So last week, they just bought $2 million worth of it. So they're just buying right now based on current fee revenue, which I wish I could see a chart for their revenue annualized. No, that's not a chart for it. Either way, regardless, they're buying about $2 million of it a week. That is fascinating.
Very interesting.
Also, I kind of love that MakerDAO rebranded, but then didn't tell anybody. So it's like, no, they'll just forget about us and think we're a new coin.
Well, to be fair,
get really excited.
As soon as you open the app, it says from Maker to Sky.
Yeah, who's gonna open the app?
Everybody.
No. The majority of the people are just gonna go buy the token and never use the platform.
That's true.
They're not even gonna know what it does, because that's just the nature of
you know what?
trading.
I'm gonna say, because we're getting to be about that time where we're gonna start to collect ourselves and ride our cats and cows off into the sunrise. And where is it? There it is. So as we get ready. Beautiful. As we get ready to do that, I would ask all of you. Thank you.
Wait, tokens have websites?
Don't worry about it.
Don't worry
about
it. It's fine. It doesn't matter.
What I would challenge every person watching to do: go to your crypto portfolio, pick the cryptocurrency that you have the highest conviction in, and for the purpose of this conversation, this little experiment, we're going to forego Bitcoin. Thank you again. Go try to use it. Go see what the experience would be like for you to use it somewhere. You're holding ETH, go put it to work somewhere. You're holding Sol, do the same thing. You're holding XRP, go try to do the same thing. You're holding Cardano, Godspeed. Go try to do the same thing. I couldn't resist. I still maintain, though, that despite all of that, I think Charles would be one of the top 3 most interesting people to talk to.
Oh, he'd be fascinating. I give Cardano a lot of shit, but Charles has been a massively positive impact on the space.
I know that he didn't mean this when he said it to me the one time I met him. So I was watching a product demo, didn't know he was there. I was talking to this guy who I later found out was his EA, his executive assistant. And we were shooting the shit. And then Charles walks in, he bumps into me, and his EA introduces us. And I get to shake his hand, and that was cool. And we were like kind of starting to get our first podcast off the ground. So of course I shot my shot and I was just like, should get you on the podcast sometime. He's like, oh yeah, cool. But I don't travel. You have to come to me. And I was like, okay, say less. I had no clue what I was doing at the time. He's like, yeah, you come out and we'll take a ride in the helicopter. He owns a Black Hawk because of course he does. And I'll show you my Falcon. And I was like, with no context, that would sound awful. But okay, cool. And that was my first meaningless invitation in crypto. But he would be an interesting dude to talk to. But like I said, take that ADA and go try to use it somewhere and let me know how that goes. Do the same thing with any crypto. If you're holding it and you think it's the future, go try to use it somewhere and tell me how it goes. Anyway. Will, before cats and cows, before we sail off and mentally prepare ourselves for the final show of the week tomorrow morning, same time, same place, do you have any final thoughts?
Any final thoughts? I will share some of the things that Trump talked about in his address to the nation, because it'll likely affect the 2026 bull market. So he says that next year there will be the largest taxed refund season of all time.
Yeah, I heard Scott Besson say the same thing.
And then also Trump is announcing a warrior dividend, which is a 1,776 stimulus check sent to the 1.5 million U.S. soldiers. 1776, the year that the nation that we signed the
Thingy.
Constitution, Declaration of
Nope.
Independence. Excuse
There it
me,
is.
Declaration of Independence. It's late. And it looks to be about it. So, large tax refunds, which makes sense.
All right.
Large tax refunds going into the November election.
Mhm.
Some dividends to soldiers, so that's nice.
They deserve it. Curious how we're going to pay for it.
They certainly deserve it. Well, I mean, you can certainly take the revenue from tariffs, which
You can't
to be
keep
very
saying
clear-
that, though, because we're all supposed to get
Well, the
multi-thousand
thing
dollar
is,
checks next
you
year.
promise everybody money from tariffs, and then you give it to one or two groups, and then you go, well, we have to keep the tariffs going if you want to get the rest of the payout. And people go, well, I do want to get paid out. And that ignores the fact that they are paying for it themselves indirectly through the large prices increases paid to the companies, because tariffs are taxes on U.S. companies, not on other countries. Anyway, who cares? Just turn on the movie Idiocracy, and we'll all go to sleep. Which, by
Well,
the way,
fingers crossed.
My girlfriend is like, I really want to watch the movie Idiocracy, and I was like, all right, just get like really worried for like it to be way too right.
Yeah, not fun anymore.
It's not fun anymore. It was
Well, that would be a cool one. Lord knows, active duty deserves it. I'm
They
not.
certainly do.
I'm not one anymore, but we were criminally underpaid. Cool.
That's all.
Well,
I got. That's it. See you in the morning.
listen, we really appreciate you guys spending so much time with us. I know today was a long one. Ran 3 different shows today, which makes Wednesday both my longest and my favorite day, because every single show is different. And we'll be back same time, same place tomorrow morning for the final installment of the Rise Up Morning Show as we head into the weekend. Evan will be back next week. Will is embarking on some travel. Will you be with us mobily or just not in the full setup, or what's your...
I won't be in the full setup, but I'll hop on here on the tiki-taki.
Thank you to all of our incredible partners and show sponsors who help make this show more... I was about to say possible, and then I was going to say more, and then I didn't
possible.
know. So I'm going to go with more better.
More goodly.
More good. Thank you to our more good sponsors. Sorry, guys.
Sponsor.
Apologies
sponsors,
to Polygon, Jito.
Sponsors money give. Show good.
Yes.
Show great.
Show good. No one tell them that
thank-
they sponsored a fake radio show.
Thanks, sponsors. Sponsors, good.
You guys made a great financial decision, and we appreciate it, and we love you for it.
We do.
So thank you, Polygon, Arculus, Unlock, Jito, and the White Whale. And actually, quick shout out that tomorrow morning at Friday morning at 9 a.m. Eastern Standard Time, Eastern US time. So we'll talk about it a little bit more tomorrow as well. Arculus is running their own live stream right here on TikTok. You can follow them at This Is Arculus. All lowercase, all one word, no punctuation, no funny nothing. Be very careful. Don't follow the wrong one. This is Arculus. And they have an exciting announcement that they've invited us to participate in with them and go hang out. So all 3 of us should be on the stream with them for that. And we'll see you there.
And
I need you all to do me a favor.
Oh, go ahead.
And don't tell them I said this. I need you all to show up and ask them about the purple wallet. Okay. Yeah, Solemn's got the right idea. Purple wallet day. I need everyone to show up and ask them about the purple wallet.
Yeah, that would be useful. I also just want to point out that the announcement on Friday will be really funny, given it's me, Alex, and Evan. And
I know.
I won't say anything else about that, but it's going to be really funny that we're the ones helping to deliver this news.
I can't wait for so many reasons. It's going to be hilarious, and it's going to be incredible, and I'm excited to share that with them. And yeah.
Just know that we really, really want people to use hardware wallets and to keep their crypto safe. And doesn't matter who or what.
You're about to see just how strongly we feel about cold storage.
We feel about that.
And if there's any doubt as to whether or not we want you to learn about self-custody, that question will not exist post-Friday.
Nope, certainly won't.
I like Jeff Rascal's comment. This is purple wallet. Lots of exclamation points.
I love it. Keep that energy up for Friday.
Keep that energy for Friday. Okay. Will, thank you for spending your evening with me. As always, wonderful to hang out with you. I don't know, to get only a little bit sappy, only for a quick second. I love that our job is to just hang out and talk about crypto. And
Nope, sorry.
oh my God.
There it is.
There you go. So let's do it again tomorrow morning, hey?
Yeah,
Same,
sure, why not, I guess.
Same
I guess-
place, different time.
I guess it's okay.
We'll see you guys then. Until then, everybody, my mouse died. Rise up.